Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me are both Shruti Mishra and Ritu Singh. Here's wishing all of you a very happy new year, as well as to both my co-anchors. On that note, let's take a look at the top headlines from the startup world. InCred Capital acquires digital investment firm Oro Wealth in an all-cash deal to foray into the retail wealth tech segment. With this buyout, the company has rolled out InCred Money.
Hospitality chain Oyo's IPO is likely to be delayed by 3 months. This after SEBI asks the startup to update risk factors, key performance indicators, pending lawsuits, and the basis for valuation in the DRHP.
Over 1.65 lakh biryanis, over 16,000 chole bhatures, and over 61,000 Domino's pizzas. That's what India ordered on Swiggy on New Year's Eve. Meanwhile, Zomato sees a 45% surge in order volumes versus 2021, while Blinkit gets a single order worth over 28,000 rupees in Bangalore.
UPI ends 2022 calendar year on a high note as volume of transactions touch a record 7.82 billion in the month of December. As per NPCI data, volume of transactions in December was up 7.12% compared to November, while the value of transactions was up 7.73% during the same period.
Meta is preparing to announce whether it will allow former US President Donald Trump back onto Facebook and Instagram. This, according to the Financial Times, that reported that the decision is now expected to be announced later than the originally announced date of January 7th.
Bitcoin falls over 60% in 2022, driven by a series of high-profile company failures and a bleak macroeconomic climate. The boldest Bitcoin calls for 2023 are out, and a 1,400% rally or a 70% plunge may be on the cards, says CNBC.
Those are the headlines we've been tracking for you this evening. InCred Capital, the institutional wealth and asset management platform of the InCred Group, is set to enter the retail wealth tech industry with the launch of InCred Money. Now, InCred Money has been launched with the acquisition of Oro Wealth in an all-cash deal. The acquisition brings assets under management of over 1,100 crore rupees, a robust technology platform, and an experienced team to InCred Money. Vijay Kopa, the co-founder of Oro Wealth, will lead InCred Money as the CEO going forward. And to elaborate on the road ahead, joining me now is the man himself. Vijay, welcome to Startup Street. Like I mentioned, InCred Money has been launched with the acquisition of Oro Wealth, which is a retail-focused digital investment platform. You co-founded the company in 2016. Take me through the contours of this acquisition. What made you partner with the InCred Group? What does their backing mean to you? And what happens to your team and the co-founders?
Thank you so much for having me on this platform, and Happy New Year to you and everybody else. So let me just set the background to the transaction. So Oro is a leading retail-focused digital investment platform. We help retail investors diversify their portfolio by providing access to niche, low-ticket investment opportunities that have traditionally been available only to high net worth, ultra-high net worth individuals and corporates. This is in addition to traditional products like mutual funds and fixed deposits, which are also part of Oro's offering. InCred Wealth is a private wealth management firm and has seen tremendous growth since its launch. It was launched in less than 2 years back and has garnered more than 15,000 crores in assets, driven mainly by a team of 100 plus private bankers. So both the companies were in the wealth space, and we've always stayed in touch, though we address different customer segments. We also know the InCred team quite well, and the founder, Mr. Bhupinder Singh. My co-founder Nitin and him used to work together in DB Singapore. So we have an old relationship.
Okay.
We're exploring ways to work together as partners, and soon the conversation evolved into a more strategic discussion.
All right.
And that's how.
Okay. Now, Vijay, with the launch of InCred Money, InCred Capital has entered the mass affluent and retail wealth tech space. You are leading as the CEO of InCred Money now. What is the plan? How do you plan to leverage Oro Wealth's offerings? What is InCred Money offering, and what is unique about them?
So the most unique thing about InCred Money will be its digital-first approach to addressing different types of customers, both B2C and on the B2B2C segment. So we believe this is a very unique model, and that will bring out the best of both traditional and alternate investment options to retail customers and to a wide network of financial advisors across the country. In addition, our product capabilities that we have at Oro, along with the resources of the InCred Group, including their industry-leading credit and risk assessment capabilities, will ensure that we give the best offering to our customers. So trust, comfort are typical of any wealth offering, and no one better than to partner with an InCred group, which has, imbibed values through InCred Wealth.
Okay. Now, there is a growing demand for non-traditional investment assets from mass affluent and retail investors due to, of course, rising income levels and greater awareness. At InCred Money, how are you going to make investments trustworthy, like you mentioned, and lucrative for the end investor? Also, what is the kind of impact you're hoping to create? Any targets you've set for yourself?
Right. So the two main issues that plague this domain is access and trust. So retail investors traditionally hasn't had access to these products. So we want to, give them a simple, easy to use platform and keep education and content as core to our outreach. The main differentiation that we will provide is the quality of products that we'll offer. Again, using the strengths of both the entities, and we'll provide superior products at lower risk. So I believe InCred Money will play a very leading role in fostering the development of this market of alternate assets as far as retail investors are concerned. Our focus will be that our products are well suited to the customers and to their needs and aspirations. Today, we are already 1,000 plus crores in AUM, and our next target would be to get to 5,000 crores before we further start a journey of exponential progress to even higher numbers.
All right, that's good to hear, Vijay. But, one final question. Let's talk about the evolving needs of customers. Going forward, the democratization of investment opportunities covering the mass affluent and retail segments will definitely create a new market, which is perhaps worth tens of billions in AUM. What is the kind of potential you see for InCred Money, and how do you plan to grab a bigger share of this market going forward?
So the total market in the audience that we are going after, it's a $2 trillion wealth market. If we like the 3% penetration that we have seen in the HNI space, it's a 60 billion AUM opportunity that's growing at least 20% year on year. So it's a very large market, and today we are just scratched the surface, maybe $1.5 billion in a year. So the way to tackle this is through better products, as I said, superior returns at much lower risk, the best experience that we can provide to our customers, access, education, and so on, and our unique distribution play. To sum up, I think we're very excited about the potential of giving these products to retail, and InCred Money will be a pioneer in the space, and we are confident that we will be able to leave a mark in the entire domain.
All right, Vijay, we'll have to wrap up this conversation, but wish you the very best for your growth plans, and once again, congratulations on the launch.
Thank you so much.
Moving on the hot seat today, we put the spotlight on Tredence, a data science and AI solutions company. The venture recently raised $175 million in its Series B funding from Advent International to accelerate data-fueled growth and AI value realization for industries. Advent will also acquire a minority stake in Tredence with the $175 million investment. The funding will help Tredence build on growth momentum, strengthen vertical capabilities, and reach a broader customer base. To elaborate on each of these plans, joining us now is Shubh Bhaumik, the co-founder and CEO of Tredence. Also joining us is my colleague Ritu Singh. Shubh, welcome to Startup Street. And like I mentioned, Advent will acquire a minority stake in Tredence. It has investment experience in the technology services and software sectors. What does their backing mean to you, and how do you plan to allocate the freshly raised funds?
Thank you, Shruti and Ritu. Thank you, CNBC and TV18 for having me today. Happy New Year to all of you. By the way, it's a little early for me here, so my apologies in advance if I look a little sleepy. I'm in California. It's 5 a.m. for me here. Let me answer your question about the funding. So first of all, it's a great thing for Tredence, and I'm very excited about our future. My co-founders, Sumit Mehra, Shashank Dubey, and I started Tredence with a dream in 2013. And this funding event is a major milestone for us. We have built a very strong foundation in the last 10 years. Now we will build on this foundation, leveraging our partnership with Advent and create an iconic company, a category-defining leader in AI services. More specifically, the investment will be used in expanding the organization's reach, both in terms of breadth and depth of our service offerings. We will consolidate our presence in verticals in which we have significant presence today. We will additionally incubate new verticals such as insurance and healthcare. We will expand into new geographies such as Europe, UK, and the Middle East. Also, we will explore M&A opportunities to further accelerate our growth.
Okay, Shubh, hi, this is Ritu. What are these M&A opportunities you're going to be exploring? Anything on the anvil? And also, if you could give us a sense of what your target addressable market size is and the opportunity you see for growth.
So to answer your first question first, the M&A opportunities in the short term, we will be looking at accelerating our entry into some of the new verticals that I mentioned, specifically insurance and healthcare. From a target addressable market perspective, Ritu, we are in an exploding market for data and AI solutions. Data and AI is becoming mainstream. Digital transformation, more specifically AI-led digital transformation, is top of mind for the C-suite in every major enterprise around the world. This industry is expected to grow into a $10 billion segment by 2025, according to Gartner. It's a very exciting time for Tredence, and our ambitions have never been greater.
All right. Shubh, in 2021, Tredence devised a vertical AI go-to-market strategy that combines deep data science expertise with business context to solve daunting industry problems. If you could share with us some of the use cases, and if you could also elaborate on Atom.ai and how it guides enterprises from design to experience to value.
Sure. Thank you for asking me that. We are all very excited about Atom. So global retailers, I'll give you a few examples. Global retailers are using our solutions to do omnichannel analytics and understanding their customers better. B2C clients in hospitality are looking for our hyper-personalization solutions. Manufacturing clients of Tredence are using our solutions to optimize their inventories and supply chains. So at the front end of the business, it's about understanding your customers better, improving the customer experience, making your marketing and campaign dollars more targeted. And in the middle and the back end of the business, it's about operational effectiveness and efficiencies, right? Improving your supply chain and distribution, taking cost out where it doesn't make sense. And then there are industry-specific use cases, such as in healthcare, you're trying to understand your population health better if you're a healthcare provider, or understanding your credit risk if you are a lender. Now, coming to Atom, Atom is our flagship industry cloud platform where all of this is going to come together. Atom will significantly accelerate the speed to value that we deliver to our customers, and we expect the platform to expand our margins and work as an additional growth catalyst.
Shubh, since we're running out of time, quickly, if you could tell us, these categories or sectors and clients that you work with across the world, the world is, a large part of the world is going to see some kind of a recession, or if not, some kind of a slowdown in growth. While AI remains an important part of the business, are there some budget cuts from clients that you're facing? And in that context, what kind of revenues would you be clocking in? Any outlook you could give us?
Yeah. So from our perspective, Ritu, demand continues to be strong. When we are talking to our clients, they're looking to invest and modernize their data and AI capabilities with us as their partners. So I'm not seeing much of an impact of a recession yet. I'm not concerned about the momentum, at least as of today. Having said that, there may be some shift in the kind of service offerings that are more in demand, and we are well positioned to take advantage of that. Coming to your second question about our revenue next year. So this year, rather last year, we did a little below $100 million. And this year, we plan to grow another 70% on top of this. So we should be able to cross $170 million or so.
All right, Shubh, that's all the time we have. Thank you very much for being with us here on CNBC TV18. And since it is the start of the year, a very happy new year, or should I say a Shubh New Year to you.
Thank you so much. That's creative. Thank you.
On that note, it is time for us to head into a short break. But coming up next, we put Vishal Chopra, the co-founder of WeRize, on the hot seat to find out more about its new products and the road to profitability. Also on the other side, India rings in the new year with biryani, chole bhature and pizzas. A special report on the other side. Full-stack financial services platform WeRize was founded in 2019 and is a socially distributed financial services platform that offers customized credit, group insurance and savings products to users residing in small towns in India. Now, calling itself the social Shopify of finance, the startup platform has built a network of local freelance financial agents who distribute products developed by the startup both in-house and in partnership in their social circles. Now, the startup is backed by investors like British International Investment, Sony Innovation Fund, 314 Capital and others. Joining us now on the hot seat is Vishal Chopra, the co-founder and CEO of WeRize. Vishal, thank you so much for joining us on the show today, and just wishing you a very happy new year. Like I said, you offer a full stack financial services to tier 2, 3 and 4 cities. So talk to us about what you have on offer. How are you creating value for your customers?
Sure. So essentially, we, as you rightly pointed out, we are building the largest financial services fintech platform for the small cities, tier 2, tier 3, tier 4 cities in India. So essentially, these are the customers that are primarily not really focused on by your fintechs or most of the private sector banks. So we see India into 3 parts, India 1 to 3. India 1 is your tier 1 city, millennial Gen Z taxpayers, where all the fintechs and most of the private sector banks like really focus on. And then our segment is the Bharat, the middle India, lower middle class customers living in tier 2, tier 3 cities. Think of Ludhiana, Amritsar, Sonipat, Salem, Coimbatore, these kind of cities, which is where most of the financial penetration comes from public sector banks. And then India 3 is your below poverty line microfinance layer. So our customers primarily bank with public sector banks, and given that public sector banks, while they do a great job in giving bank accounts to the customers, they're not as aggressive as their private sector counterparts when giving credit cards or unsecured loans or selling insurance or saving products to these customers. So that's where we fit in. We are a 3.5-year-old company currently with the customers in 2,000 cities, 700,000 customers across 2,000 cities. We distribute our products through a network of freelancers, financially literate freelancers. So we have around 10,000 such freelancers. We have currently the scale, in terms of scale, we are at like $17 million revenue run rate, doubling every 6 to 8 months. We are EBITDA positive for last couple of months, and we are maybe a quarter away from net profitability.
All right, so we're going to discuss all of this in a little bit of detail going forward.
Sure.
You've also raised a little over $25 million till date. Your last round, you got $15 million. Have you launched any new products or services? What's in the pipeline? Which are the products you've launched recently?
Sure. So for us, we have products across lending, like a couple of products on the credit, couple of products on the insurance side, and then there are few products across neobanking and saving that are currently in pilot. So with this money that we have, and thankfully we don't have much burn. In fact, we will be generating cash a couple of months down the line when we become profitable in a quarter or so. So the investment will primarily go into learning more and more about the product gaps that exist in our customer segment across the 3 different verticals, and keep on adding more and more freelancers across more and more cities. So that's like a natural progress. So there is a huge gap across the 3: savings, credit, and insurance.
Correct.
And our job is to get more and more data. We have 700,000 customers, 3 billion plus data points across these customers. So we learn, our models learn, and we keep on innovating and creating new products.
All right. So like you said, you have customized credit, insurance, and savings products. So which category is seeing the most amount of demand at this point in time? Where is your loan book at? What about NPAs?
Sure. So essentially, lending is always the largest. So if you look at globally, also lending related products are always 80 to 90% of the overall profit pool of financial services, and more so in India. So naturally, lending is the largest, and some of the other products around the savings are more on the pilot phase and yet to pick up because they're recently launched. So we are still learning about those. So 90% comes from lending. Sorry, what was the other question? So that gives
just want to know what your NPAs were at and what your loan book is at.
So loan book is around 400 crores right now. That is both lending and co-lending. So we have our own NBFC as well as we do co-lending with other partner institutions.
Okay.
So that is around 400 crores and less than 1% NPA despite COVID. So one of the reasons why that NPAs work so well is that we primarily are freelancers, which are like LIC agent or CSC agents across these 2,000 cities. They actually are paid when our collections happen. So they are incentivized because they are part of the social fabric of the small city India society. So as we get our money, they also get paid. So there is this incentive alignment which helps us have pretty solid NPS, so less than 1%.
All right, and let's talk about your numbers. You said you're EBITDA positive and you're going to be profitable soon. So talk to us about your current revenues. How soon will you achieve profitability? A couple months from now, when would that be? What are the targets you've set for yourself going forward?
So we are at a revenue run rate because we are growing rapidly. So we have grown like calendar year over calendar year close to like 3.5x. So our current run rate is around $17 million revenue run rate, and we expect to double this every 8 to 9 months. So net year to year achieve around 3x growth for next at least 2 years. We are EBITDA positive. So we have two companies. There is a technology company and there is NBFC. NBFC, which is the subsidiary. NBFC is profitable for a while. And now at a group holding company level, we are EBITDA positive for last few months. I think within 3 to 6 months, we will start to make net profit at the holdco level. And the reason why we are able to reach profitability so quickly is because we don't have any marketing expenses. We don't have any Google or Facebook marketing expense. These freelancers are the ones that are able to get customers to us. And second, something very unique to us is, to manage these freelancers in 2,000 cities, we don't have any operations or feet on the street or any branches. So the office in Bangalore that I'm talking from right now is the only office we have. I'm sorry, there's some power.
That's okay, no problem.
Yeah. But we do not have any feet on street or operations on the ground, and that leads to a huge saving because essentially our only cost is the technology platform cost.
Correct.
So we are in fact I would want to point out that while this freelancer based model is not very unique, LIC, which is the pioneer of this freelancer based product distribution, we are the only one in the world which has been able to crack this at scale without any feet on street or branches. So if you look at LIC or some other companies, they have their own development officers to acquire, train, manage these freelancers.
Right.
We don't have anything. We are able to manage them through the platform.
Absolutely.
That's the reason for profitability.
Yes. So 3 to 6 months, we'll see net profits there. All right. Yes. Vishal, thank you so much for joining us on the show. We're completely out of time and we wish you all the best going forward.
Thank you so much.
Now, over 1.65 lakh biryanis, over 16,000 chole bhatures and over 61,000 Domino's pizzas. That's what India ordered on Swiggy on New Year's Eve. Meanwhile, Zomato saw a 45% surge in order volumes versus the 2021 count, while Blinkit got a single order worth over 28,000 rupees from Bangalore. Shilpa Ranipeta is here with us with India's favorite food and most interesting orders and what excited customers on New Year's Eve. Shilpa, before you tell us about India, tell me if you ordered anything on New Year's Eve.
I think I wasn't part of that entire order that Swiggy and Zomato may have gotten, but a large number of you may have been out partying during New Year's Eve. But if data from Swiggy and Zomato is anything to go by, an equally large number of people brought in 2023 at home. And expecting a huge rush throughout the night, orders started pouring in early, with Swiggy registering 1.3 million orders by 6:30 p.m. itself. Now, the platform saw most orders coming in from Bengaluru, followed by Hyderabad. Then there was Mumbai, Chennai, Delhi, and then followed by Chennai. And what did they order? Well, it's always biryani at the top of every food list. Even before 7:20 p.m., more than 1.6 lakh orders were placed for biryanis. And along with that, there were over 61,000 orders for Domino's pizzas as well. Interestingly, many were also seeking comfort food, with more than 12,000 orders for khichdi's being placed. Now, Zomato wasn't far behind either. Its order volumes were up 45%, and 4 of which the CEO Dipinder Goyal himself delivered as well. And at Zomato too, biryani was among the most ordered food items. Now, more than food, grocery orders were in high demand. Now, look at these stats from Swiggy's Instamat. 1.76 lakh orders for chips, more than 13,000 for nachos, nearly 15,000 for sodas, and nearly 14,000 lemons. All these even before just 9 p.m. And some of the interesting standouts here, there were about 3,000 orders for stationery items. And as the night progressed, the demand for condoms also peaked. Now, it was a party for Blinkit as well. Now, over 56,000 packets of chips, 1.5 lakh lemons and other party essentials were bought. And its biggest order, that was worth nearly 29,000 rupees from a customer in Bengaluru. In fact, Goyal also tweeted that Zomato delivered more orders orders just this New Year's Eve than it did in all the first 3 years of launching its food delivery service. So a very happy New Year for these platforms indeed.
Well, thank you, Shilpa, for taking us through some of the most interesting orders and what excited customers on New Year's Eve. With that, it's a wrap on this edition of Startup Street. Wish you all a very happy New Year. More news and updates coming up on the other side.